All right, the buyer's strike continues as we enter this season of volatility. Hey, I'm Luke Downey going over the latest insights at Map Signals. If you love history, you love data, you are going to love what we have to say today. So last week we talked about when the bottom falls out of the big money index, stocks tend to sputter, and that's exactly what they have been doing. Now, there is a reason I think this volatility continues over the next few weeks, and we will go into a great study. But before we do that, let's look at our favorite indicator, and this is the big money index. If you're not following this, you are missing out on some insights under the surface. So again, the big money index, what does it do? It tracks thousands of stocks buying and selling, and then it puts this beautiful indicator to tell us whenever money's coming out of stocks, the market tends to fall. When money is going into stocks, the markets tend to rally. But we have been falling steadily really since February, and then you can see that we started to nosedive right ahead of that big tech washout that we had over a week. We got to keep diving under the surface because there are clues that are going to tell us where the weak points are and where the strong points are. So, as we have been saying, the latest rally that we're seeing in the market, it is being held up really by cyclical areas. And what do we mean by cyclical areas? These are areas that do well. They perform whenever the economy is actually growing. So think about energy, right? People are spending, they're driving, they are filling up their gas tank. Energy is the number one sector with a MAP score of 68.1. We've been all over this move in energy. It still is going up. Number two is financials. Why are they doing well? Well, we know that interest rates are set to decline. The Fed is going to cut. Don't listen to the bears argue about when. It doesn't matter when. The fact is, when rates come down, financials do way better. Number three is industrials. There's a lot of building going on all over the United States. Industrial companies, they are in pole position there. And then number four, people are talking about raw materials at high prices. Well, guess what? Materials companies, their margins expand whenever you have high costs of materials. And why are these areas doing so well? It's because technology has taken a back seat. They were at number one and they have quickly gone down to number 7. So this is the main reason the BMI continues to fall, is because a lot of technology stocks are under pressure. Let me show you what I mean. If we look from March 15th through April 24th, look, these are the 4 areas of inflows, right? Energy, nearly 10-to-1 buys to sells. Financials, 2-to-1 buys to sells. Industrials, more balanced in favor of the buyers. And then materials, wow. I mean, what is that? 7-to-1, 8-to-1 buys to sells. Where are the major outflows? It is in tech with nearly 2 sells for every buy. Listen, this is what you need to be focused on, is where's the money coming out? And then where is the money finding its way? It's in these areas. But why do I think this is the season of volatility? Why do I think volatility continues to persist over the near term? Is because we can look at history, and it tells us that if we look at the later areas of April through May, those 4-week areas, seasonally weak, okay? Here's what we know. From 1998 to 2023, the later areas of April through May, look at this, the S&P 500, flat. S&P small cap 600, flat, all right? So a lot of choppiness here. You always hear sell in May. There is some real historical evidence of this, but this is why we want you to be buying the dip during this period, because May 20th through July, look at this, S&P 500 gains on average 1.7%, small caps up 2.5%. Starting in August, right? You go into the end of year rally, 3.27% for the S&P 500, 4.7% for the S&P small cap 600. So volatility is always an opportunity. There are so many stocks that people are not talking about. They're not on YouTube, I'm telling you, that are going up with big money support. It is in these areas, folks, energy, financials, industrials, materials. These are the areas we're telling people to be overweighting in the months ahead. You guys hang in there. The volatility will pass. Just keep focusing on great companies. I'll see you next time.